Eric Mother, Mother.com. Just want to do a quick review for NVAX after its recent run, and just to show you what the charts are looking like. You know, $4 to about $9.60, somewhere around there, dropped to about 7, went all the way to 15. So nice two moves here and here. The question is, what next? Do we get a move from here to higher levels? Just want to show you what I'm looking at and some things that you can consider. First and foremost, let's go to a long-term weekly chart. Show you that I think there's a chance here that this could be a serious break. Let's go back about 7 years on the weekly, and you can see, because this is 2011, so any trend line from about 3 years plus, so any trend line about 3 years old or more can be looked upon as being a primary trend line. We can see here that if we draw a line connecting RSI lows, as of right now we seem to be breaking that trend line there. So this is a break, which could suggest that at this rate there could be lower prices. It's something to keep an eye on. Now on this weekly chart, just want to point out something here. Obviously, if we can hold the 50 level, we moved above 50 there, we bounced back above 50 during these lows, we had a double bottom support around the 50 during these lows, nice U-type formation below 50, back above it for those lows there. Eventually we have uniform activity here below 50, back above it for these lows, and a move higher. So right now, without knowing what the future brings, if this stock is to do well, the first thing it needs to do is weave itself back above 50. So that's a requirement if it's gonna do well. If I take a look here now at the weekly MACDs, and something we'll also see on the monthly is, in my opinion, the MACDs are showing a double top, and I think that's a problem. In fact, let's go to the monthly charts, take a look at a long-term monthly view, and I discussed this previously. Problem with this stock visually is it has this volatility going back to the mid-90s. Every time it has a nice move, it gives back gains, and I call this an ugly chart, which means that when it gets a spike, you better be careful, because what could be coming next is a move lower, because that's been the trend, as you can see. So I think, and I discussed this a couple of weeks ago, the probability here is that it could do the same, suggesting lower prices in short order and a sharp drop. In fact, there's also another argument that this stock did come back and test the 15 level. As such is the case, this is a double top with about 13 years of separation. I think that's not a good sign. In fact, I would speculate that this is probably gonna probe the single, I guess, mid single digits, the 4s, the 5s, the 2s, even the 3s, or even the 1s. I mean, something it's done over time. Now that it's had this nice spike, history does indicate that it tends to give back a lot of the gains. Also, on this monthly chart, I'm really looking at this as a double top on the monthly RSI, which is not a good sign. We also look at the history of the stock and go back to this break here. So call it that break somewhere there, and draw a line. We can either draw the line somewhere there, and you can see the stock has a history every time it touches that line of seeing a sharp reversal. Here's $8, it reversed all the way to $1. Here's a reversal with uniform activity. Again, the highs of 7 went all the way to just close to $1. And now with this double top, if it cracks below that level and trades underneath that blue line, that's very bearish. So if it trades below that, that's bearish. Also, keep in mind that there's a possibility that this could be a break of a trend line going back to 2012, so that's 3 years plus. So if it breaks these lows on the monthly, a break of that trend line on the monthly would indicate a severe break, which also points to lower prices. If we take a look at a monthly, 3-year monthly chart, if the stock is to do well, it needs to break out above this close to $12 close. So at about $12 is where the recent closing high on a monthly basis. So about $12, it needs to be above that if it's gonna do well. Otherwise, anything below that, and if it's not breaking out, I would be very skeptical of lower prices. So if it can climb above that previous monthly closing high at about $12, there's a chance it could actually be fixing some of the issues on the chart. But for now, I think holding it while it's not breaking out is risky, in my opinion. In fact, take a look at the daily as we go to smaller time frames. A couple of observations, and we see here that we made a high, and I discussed this with you when this was taking place in the high of 14s. I was talking about this negative divergence, and I discussed the negative divergence came with double top resistance. That resistance was a rejection at 69.1. So prices were making improving highs, but the RSI failed twice to recapture that 69.1 level right there. And I think this double top to me is a significant resistance, which might explain why we've been down. Keep note of the fact that if you take a look at the MACDs, and this is something we don't discuss a lot, but you see here it went above zero and back below it with uniform activity. Looks like an inverted V, which is this area here. Sell signal, and I'll share that price with you, is about $12, $13. And also we see here uniform activity. It came close to zero, somewhere around here, somewhere around there, went higher, came back and broke that line there, so and then also moved below zero. So the daily MACDs over the last 2-3 weeks were pointing to lower prices. We see that this MACD, this movement here, is what made the MACD have uniform activity. MACD moved back below zero at a price of about $12. Right now we're trading under 10. So I think the risk here is for lower prices. One other indication of what could take place here is by taking a look at the BTK. Now BTK, let's go back on the weekly, go back a couple years. Let's go back about 5 or maybe 6 years or so on the weekly. Just want to show you that ever since we moved above this level here, this has been leadership. Bouncing above 50 has been where it has been finding support. So the BTK as of right now, it's early on in the week. If it can recapture 50, that's good. The level back above 50, that would be good. Also, if it can hold this trend line here, this line has been where it has been bouncing. As you can see on this weekly chart over the last 3-4 years, nice bounces on the line. So if it is to do well, it needs to continue holding above that line. Right now we are seeing a double, a nice, so it needs to hold here. We see a double bottom, and we can see this clearly on a 2-year weekly. This needs to hold right here, this support line with a double, nice looking double bottom. This needs to hold if the BTK is to help NVAX stabilize and move higher. Now curiously here we are down right now for the week. The more this becomes rejection at 50, the more it becomes a problem. Just like I noticed, or I pointed out in the previous chart going back many years, this has been support zone around the 50. Now if we are entering a new phase in the market and this 50 zone now becomes resistance, then that would indicate that the market has changed its behavior, and now we should start expecting lower prices in terms of the BTK and also in terms of individual stocks within the biotech space. So above 50 is good, below 50 means a change in the sentiment in this market. Also take a look at this nice crossover between the 13-week moving average, undercutting the 34-week moving average. This was in 34-week move 13, undercutting the 34. This was in 2012. Now we are looking at the possibility of this being a bearish crossover again between the 13-week moving average and the 34-week moving average, which would be bearish. Longer term, one thing we have to look at also here is the monthly. We can see the possibility that in the coming months that this line here could break, and if that breaks on the monthly, 3-year monthly, that would not be good. So let's keep that in mind. Right now the bulls are getting exactly what they wanted to see, which is support on that line there, which is good. So right now looks good. It would be even more bullish if it can move back above 69.1 on the monthly. So if you're looking to really own this sector when it is looking great and on fire, it needs to be back above 69.1. As you can see, over these two and a half years here, between 2013 and mid 2015, the market stayed above 69.1, and you can see that the biotech space was able to be leadership in the market, and it needs to be back above 69.1 if the biotech stocks are to do well. Otherwise, just like I said, if it breaks that very clear line in the coming months, if this breaks, whoa, watch out for even more sharp downside. There's also another indication here, or something else. If this becomes resistance, the 50 level where it has been bouncing, just like it bounced on the 50 level here for nice lows in 2014, if this becomes resistance now, then that would indicate a market that has changed its behavior. Instead of moving to new highs, it might start probing fresh lows. Take a look at NVAX also. On the weekly, it needs to be above 50 if it is to do well, just like we mentioned that. So those are some of the things we can look at, and we take a look here at the daily for the biotech space. One thing I wanted to point out here is that at the time when it was moving higher and doing well, being leadership in the market, you can see it, uniform activity below 50, back above it for nice lows, uniform activity below 50, back above it. So it was using this area here to bounce on the 50 level and moving to fresh highs. So this is the behavior for a market that is bullish to stable. Now you can even see here the short-term lows came around 50 and the market would recapture back above 50. Right now we are looking at the possibility that this is a different market, because we've been rejected at 50, and that rejection at 50 here beginning of August was actually around this high here, and right now we seem to be struggling to hold above the same level. So clearly, if this market has changed its behavior, then we are going to see more and more instances where it comes to the 50 and stalls. Otherwise, the true test is if it can move back above this 50 level. If it can move above this line that has become recent resistance, then maybe biotech might have some chance of moving higher. Also, you can use this 200-day moving average. How it behaves around the 200-day moving average, recapturing above the 200-day moving average is bullish. Showing resistance around the 200-day and coiling back down is a sign of a market that has truly lost all its momentum and could be going lower. So if you're looking for some type of short-term indication of what markets are trying to do here in terms of BTK and biotech stocks, this line here where it has been showing resistance over the last month and a half, if this continues being resistance, expect lower prices. Otherwise, if it can weave itself above that line, maybe biotech might be back in play. So those are some of the factors. I think, to me, NVAX to me looks like a questionable stock, just because, as we saw on the monthly, this is not what you want to see. Generally speaking, this is an indication of a stock that can lose you money at any moment because of this ugly type of history. So right now that it had a nice move, it's starting to show signs that it is doing what it does, which is move higher and lose all its gains. Be careful out there. Eric Muadh, Muadh.com. Good luck, peace, and blessings. Woo! EACS.